Let me move over to Nahashan Mungai, who is the Executive Director at Standard Investment Bank. Very welcome to you, Nahashan. I speak to you as an investor in this particular asset. Perhaps you can walk us through what are your views when you look at gold and what triggered you to actually invest in gold, especially the gold ETF that is listed on the Nairobi Securities Exchange. A very warm welcome to you, Nahashan, and over to you.
Thank you. Thank you, Vive, for having me. And I mean, it's really exciting to have this conversation and to talk about why we should invest in gold as fund managers. I think in April, when we when we thought about getting into a position in gold, the biggest reason why we made that decision was really just a risk management decision, because we manage our investors' funds in very many financial instruments. So for us, it was very important to ask ourselves, as we move into an uncertain period where you have trade tensions between the US and China, which at the time was a very big deal in April. You have issues around COVID, and this is expected to be thus for a while. We had to ask ourselves, how do we hedge our investors against these concerns? And our fund is able to go short markets. So we can still hedge ourselves against falling markets by going short the various financial instruments that we trade. But one of the obvious choices when you're going through a crisis and when you're going through a difficult period is actually just to buy gold. And not just gold, any type of precious metal, but gold happens to outperform over time. So that was really the decision that was really the thinking behind going into the gold ETF. And I think Mansa X is really the first fund manager in Kenya to invest in the gold ETF. And I'm happy to see now that there's a lot more interest and a lot more local investors are actually trying to go into this product. So there's somebody who asked whether the horse has already bolted, whether we have missed the bus. So as I mean, I agree with one of the first speakers that said it's very hard to tell whether an asset of this nature, especially given the unique circumstances that we find ourselves in, is actually trading at the top. What you want to do is look at the historical pattern of such an asset class, similar to what Michael was alluding to. So it's very important to remember that gold is a non-yielding asset. And that means it's a very unique asset to hold, in that a gold bullion that you buy today at say $2,000 an ounce still remains a gold bullion worth $2,000 an ounce. You know, the physical asset doesn't actually really change. So what will increase its value is investors feeling that other asset classes will continue to yield lower than the capital gains that you get from holding these assets. So with central banks pumping liquidity into markets, then you expect that it becomes more sensible, therefore, now to hold gold, whether it's an unyielding asset or not. Now it becomes sensible to hold it. And we expect that central banks will continue to prop up economies for the next foreseeable future. So we expect that gold will continue to be an outperforming asset. And there was also another question someone asked about whether the stock market is now rallying and it seems to be correcting, and therefore is gold therefore going to start losing value? Exactly. Our opinion is the stock market right now is outperforming because of the liquidity support that the central bankers are giving to the stock market. So if you look at the underlying fundamentals of most companies that are listed, say, on the S&P 500, most companies are not doing very well. In fact, they're having the worst performance they've had in years. And based on this, you then ask yourself, so why is the stock market running? So the stock market is running because of extra liquidity that's coming from the Federal Reserve and several central banks just pumping and printing money. So based on this, we expect that gold will continue to perform.
Oh, fantastic. Thank you so much for that. Let me follow up with a question. So you decided to invest in the new gold ETF in the Kenyan market, yet you had different opportunities, whether to invest in the physical physical gold or to go overseas and buy different ETFs, and especially because you have a lot of liquidity and visibility of the market. You're not only trading
Yeah.
here. Perhaps you can tell
Yes.
us, firstly, why did you choose the Kenyan Gold ETF as a product, from your standpoint as an investor? And also, secondly, when you say you can take a short position, are you short on gold or are you long on gold? If that's a question that you can't answer without bridging on your proprietary rights as far as Mansa X is concerned. Over to you, Nahashan.
Okay. So why did we decide to go for the new Kenya Gold ETF, whereas we have so many other liquidity providers that we use? I'd say because it's a very well structured product, and it surprises us that we were, a lot of people had not seen how well structured it is. Um, I think Michael alluded to this. What you have, the new gold ETF on the Nairobi Stock Exchange actually represents real, actual gold bullion uh, stored in London warehouses. So that's quite unique. And additionally, we felt that it's our responsibility as a fund that's domiciled in Kenya, regulated in Kenya, and that has Kenyan investors to also push liquidity into the alternative asset classes that are available on the stock market. And that was also one of the reasons that drove us into investing in the new Kenya gold ETF. Then, in terms of whether we are long gold or short gold, I'd answer that question by first stating that Mansa X will trade long or short different asset classes with different tenors that we're looking at. So long term, we have always held a view, and this is something we have been very clear about from the beginning, that we've always been bullish on gold. And this is from our inception. Back in 2018, we started calling for higher gold prices back when it was trading at about $1,250 an ounce. And that's a long-term view that we've always held. However, in the short to medium term, sometimes we find ourselves short gold. So that
Okay.
also happens as part of our portfolio management. But overall, we remain bullish on gold prices.
Okay, thank you very much from that. I hear you as an investor, you say this was convenient for you. It made perfect sense. And the underlying security in terms of the gold ETF being the gold bullion actually gave you a huge sense of comfort. So I really like that. And I like hearing the voice of the investor.